Switzerland is facing a potential problem which threatens few other developed economies, a booming housing sector which is in danger of overheating. The latest edition of the UBS Real Estate Bubble Index shows the housing sector is approaching the risk category. Matthias Holzhey is one of the men behind the index and he joins me down the line from Zurich. Matthias, why has the index jumped to the highest level in 20 years during Q4?
The strong quarter-on-quarter rise reflects the increase in 5 of these 6 sub-indices which the index is based on. The rise is mostly being fueled by a relatively strong surge in the home prices, combined with slight deflation and stagnant incomes. And second, there is the impact of the record low interest rates, which we also see in the sub-indices, so that the household mortgage debt and the proportion of credit application for residential property which is not intended for owner occupancy has also been rising strongly. This reflects the strong investor interest now in real estate, given the lack of investment alternatives.
It does seem strange that the index is so bullish because of the deflationary environment and weak economic growth projected for Switzerland. So why does the real estate sector remain so strong to this backdrop?
We see that the main reason for that is the record low interest rate environment, combined with maybe over-optimistic expectations from investors, given that strong price increases in the past, so that people just think that this rally could go on forever, and as a consequence we could run into a real estate bubble. For this year we expect still price increases which are over average, from around 4% for condominiums and 3.5% for single family homes, and we just don't think that without rising interest rates the rally won't stop.
We are approaching the risk phase of the index. What does this actually mean for property prices in Switzerland?
There's no immediate change in that sense. It's just if you compare the numbers to the late 1980s, you see that it went up really fast. Then suddenly, starting from 1987, when we had more or less the same level as we have now, then it just went very fast to the risk level, and then we are already very soon in the bubble territory. So, but it has no real immediate impact.
You mentioned the previous bubble. Are there signs the situation is similar to the late 80s and early 90s?
Only the price development is similar. It's even in some regions prices have increased even stronger now than in the last bubble. For example, in the Lake Geneva region or in some tourism resorts. But there is a fundamental difference. Now the whole price increase is mostly driven by too much demand, and over-demand, and not enough supply. While in the 80s we had a real building boom, and driven by mostly speculative demand.
Well, the SNB certainly will face an interesting dilemma on interest rates if the housing sector really starts to overheat. That's all for the moment, but there is lots more to keep you informed on what's happening in the markets here on Dukascopy TV. Goodbye for now.